thank you for stepping into the world of your girl, Sade Jackson, the realtor. I love coming in and sharing with you all information about the real estate market and even the home tours that I provide. Take a second and subscribe to my YouTube channel. Like the videos or share the videos out with individuals who you think can benefit from it. Let's get into the lesson for today. First-time home buyers who need a checklist on getting started, this is for you. The first thing you want to do is connect with a lender. For some people, this can be a scary move, kind of like checking your bank account when you are uncertain of the results. Y'all know how that is. But this is the step that's going to allow you to know exactly where you stand financially. The reason why you connect and reach out to a mortgage lender first is because they will tell you how financially prepared you are and even provide you with a ballpark figure of homes that you can potentially consider. Being that this is a move that can tie you up emotionally, you can easily assume wrong or exhaust your efforts in the wrong direction. So it's much better to get professional advice from the start than to make assumptions about what you think you should do. So let me give you an example. Many people look at their credit score statement and they see all this debt that they have and they begin making payments, paying here, paying there, to get it down, because in their eyes it's a lot, and in order to get approved it all needs to be paid off. Well, sometimes people pay debt down that wouldn't have stopped them from getting approved. And in hindsight, they realize that the money that they used could have went towards their down payment instead. In this next step, you want to consider that you may have to prepare your finances for a mortgage. You may have to improve your credit, pay down debt, or save more for your down payment or closing costs. After you have spoken to your lender and they tell you what you need to do to get your finances in order, you are going to follow those exact steps to the T. Don't stray away. They know best because they're the professional. If you need to improve your score, keep in mind that different loan programs will require different minimum scores, and there are some government-backed loans that offer approvals to applicants with scores as low as 500. Other than showing that you qualify for a home, your credit score also matters, because the higher your score, the lower your interest rates may be. If improving your credit score is one of the areas that needs some work, here are 3 things you might need to do. First, some ways that you can improve your credit is by disputing inaccuracies, addressing major issues like credit utilization rate and collection accounts, and you also want to avoid opening new accounts while making one-time payments with older ones. 2, you can pay down debt. Now, before you go using all of your coins to pay everything down or off, contact me. Especially if you're in the Houston area, please contact me. I have a lender who will be able to provide you with exactly what cards you need to focus on and how much you need to pay them down to get you in a range that qualifies you for a home loan. But what influences your mortgage approval is your debt to income ratio. Usually, lenders want to see a debt to income ratio of no more than 43%. So what that means is that no more than 43% of your income should go to debt payments, including your mortgage, each month. If your debt puts you over that guideline, be ready to pay it down first. The third thing you can do to prepare your finances is to save more for your down payment or your closing costs. When you get to the closing table, there will be a certain amount of money that you are expected to come with. Expect to put down at least 3% for your down payment, though 20% is best if you want to avoid private mortgage insurance, And don't forget about closing costs, which will be about 2% to 5% of your home's purchase price. Or we could look at it like this: about $6,000 to $15,000 on a $300,000 home. The third thing that you will check off your list as a future homeowner is explore your mortgage options. Depending on your financial status, that can be an indicator of your mortgage options that are available to you. And discussing with a lender will allow you to know which loans is best for you. There are a few types of programs that you can choose from. There's conventional loans, some of which does have first-time home buyer programs. Other options are the Federal Housing Administration or FHA loans. You have Veterans Affairs or U.S. Department of Agriculture loans, which offer low or no down payment options. And if you qualify for any of the assistance programs, there's a chance your down payment may be covered. And that will allow you to be closer to your goal than what you may think. Well, that's all I have for you. Thank you for stepping into the world of your girl, Sade Jackson, the Realtor. Subscribe, like, share. And if you have a request for a particular video that you would like to see, leave it in the comments section below. Until next time, beautiful people.